Thank you for joining us at XM.com for today's market comment by Harlambos Bisuros. I'm Maria Pachurdiz. The US dollar rebounded somewhat against most of its major peers on Monday, although the fact that it lost decent ground against the euro and the pound kept the dollar index lower. Today, the greenback is trading higher or unchanged. Following Friday's disappointing ISM manufacturing PMI for February, the dollar came under some selling interest as investors slightly brought forward their Fed rate cut bets. However, today, the market's implied path is back near the levels observed before the ISM release. Market participants are assigning an 80% chance for the Fed to deliver its first 25 basis point cut in June, while the total number of basis points expected to be cut by the end of the year is at 85, slightly more than the Fed's own projections of 75. This suggests that there is still some room for the dollar and Treasury yields to further recover should incoming data and events corroborate the Fed's higher for longer mantra. The highlights for dollar traders this week may be Fed Chair Powell's testimony before Congress on Wednesday and Thursday, as well as Friday's non-farm payrolls. Nonetheless, that doesn't mean that today's ISM non-manufacturing PMI for February will pass unnoticed. On the contrary, following the disappointment in the manufacturing index, and given that the services sector accounts for around 70% of US GDP, the non-manufacturing PMI may impact Fed bets even more. The yen stabilized somewhat today, keeping dollar-yen below the key resistance zone of 150.80. Perhaps yen sellers covered some of their short positions after the Tokyo CPIs revealed a strong acceleration in inflation during February. However, with the majority of BOJ policymakers holding the view that even if a hike is delivered just after the spring wage negotiations, the pace of subsequent hikes in Japan will be very gradual, the yen is unlikely to stage a strong recovery anytime soon. The Australian and New Zealand dollars are the main losers today, perhaps as China's target for economic growth in 2024 was announced at around 5%, the same as in 2023, but with a budget deficit targeted at 3%, lower than the 3.8% target last year. U.S. stock indices closed slightly in the red yesterday, but that was after the S&P 500 hit another record high during the day. Despite the dollar's recovery, gold continued marching north, closing the distance from its record high to less than 1%. In the crypto space, Bitcoin extended its rally to a more than two-year high, surpassing the psychological barrier of $65,000. Thanks for watching today's market comment here at XM.com.